Good morning, traders. Welcome to the Elliott Wave Street Weekly Update. I'm Juan Maldonado, and it's a pleasure to start the week by checking some of our wave counts. Don't forget that you can sign up to access our membership on ElliottWaveStreet.com. Let's start here with the euro dollar, where we are seeing a pattern that is one of my favorites when we're finding a setup. This pattern is called the crown pattern. The crown pattern is when you have the price, in this case, going down, the retrace, the price going down, the retrace, the price going down, and then the reversal. So the key hint to understand the crown is that we have the neckline, let's call it like that, a higher or in the other direction than the previous trend. What I mean is that when we have a head and shoulders, inverted head and shoulders, we're going to see it like this. The neckline is going to be in the same direction as the previous bear trend, and in the crown pattern we are seeing the opposite. The right side of the pattern is higher than the left side of the pattern. So of course, that's gonna give us a difference between one and the other. And the other key hint is that the crown usually finish the right side where the left side ended. That creates an area that we need to watch, that we need to look for in order to find the reversal. So let's go now to the real life, and we can see the pattern. Look, here we have the price going down, we have the left side, we have the lower side, and we have this strong move up. And the area where we are going to look for the reversal on the euro is going to be this area, the area that we are currently, thanks to this beautiful pattern. Last week, I was telling my clients that we were likely to visit the 117 area on the euro because the crown pattern. Now, let's talk about reversals, because let's say that the market is going down like this, like this, like this. And you are seeing before a move up where you believe it's the wave 1 and you are in the wave 2. So this is one of the most common mistakes that we can find when we are applying the Elliott wave theory. And is saying, okay, if this is the wave 1 and this is the wave 2, it already give a decent discount or retrace, so I can go long and I can leave my protective stop loss somewhere here, because it's the wave 1 and it's the wave 2. And if you ask that trader, why are you going to buy there? And the answer will be because we are in the wave 2 and then the wave 3 will trigger, and I want to be part of the whole wave 3. But if the price continues lower and makes the low here, that trader is going to finish absolutely frustrated. And it's going to say, oh, the Elliott wave theory doesn't work, right? So the thing is that we need the wave count plus something else. And that something else is called the validation. The Japanese traders were saying from centuries ago that we should have, when we are finding the end of a corrective wave, or when we are finding the end of anything, that we should see some buyers, and they call that the bullish engulfing candle. But not necessarily when you have the bullish engulfing candle is the end of the move. It's just the fact that the institutional traders are buying. So in that case, well, it depends on the wave count, of course, but in this case, I would like to see another low after seeing the buyers, and that's where I want to buy it at the reversal. Make sense? Let's have a look at the euro. Let's see how that's going to work. So far on the euro, we are only seeing sellers and some profit taking. This is profit taking, this is profit taking. So now I need to see some price, some bullish price action, something like this, showing some buyers. showing that engulfing concept. It's not just one candle, it's the whole concept. And once I have some buyers, I would like to see the price coming down here again. And that's where I want to buy it at the reversal. So the price moving below wave 3 black, bouncing from the lows and closing on the hourly chart above wave 3, that's where I'm going to trigger the euro. So it's not because we're in the wave 2, it's because we are in the wave 2 plus we are seeing the institutions buying, not before. So this is going to be one of my favorites for the week. And on the other hand, we are seeing the S&P this week going down strongly, but let's say that the price makes something like this and makes a low. Well, I didn't buy it, but I will buy it at the bottom of the market right here. That will be my entry. So if the price goes down and shows a reversal, I'm going to buy it there because I already have all these buyers. And this will become a corrective wave, and that's it, but without showing any trade. Let's have a look at another, the EURUSD. We went short on the EURUSD. On the membership, let me show you the trade. I share my trades with my clients on the Telegram channel. Once you activate your membership, you are going to get access to the Telegram channel. So look, this was my trade. Sell stop EURUSD 130.54 with a protective stop loss at the 130.84. So we're talking 30 pips. And the take profit at the 128. And we are getting closer to the target, the 128. This is a trade of 254 pips. So I was able to trigger my trade at the 54 around this area, and I leave a protective stop loss at the 83. So the price never reached the stop loss area, and look where we are. So risk, reward. Wow. Those are the type of trades that we need to look for, that we need to wait for them, that we need to have an ideal validation. So now I'm just waiting to see the price coming down to my target, but it's already a winner. More than 200 pips on this trade is a beautiful trade, and you can be part of the Telegram channel by signing up in one of the of the Elliott Wave Street memberships. So you will get the explanation of the trade, so the educational part every day. You will get the trade idea, and you will get the explanation and how to manage the trade during the whole process using the Elliott Wave theory. That is fantastic. So you will see in action how to use the Elliott Wave theory every day. Let's have a look at the S&P. Wow, the S&P is doing a big sell-off, but if we check the weekly chart, it's not that big. On the weekly chart, we're seeing a discount, 3 weeks in a row going down. Nothing to worry about yet, unless we see a huge move down. That in that case we can worry. But so far, we are not seeing any signals to worry about this sell-off on the S&P. Is just a healthy discount, is just a healthy pause in the trend. The trend on the S&P was too expensive, was going up too fast. We were seeing several weeks, week after week, seeing new record highs on the S&P. So it was time to have a discount. The question we need to answer, to find the answer on lower time frames, is when, how this corrective wave is going to be over in order to jump into the bullish trend. And the markets are fractal. So what we can do, we can go to lower time frames to find out what is going on here. I'm looking for the opening today because I would like to see if once the real market is open, if it's going to continue selling off or if it's going to start going sideways. Because my buy trade on the S&P will be if, only if, we have the wave 4, if we have a bullish trap, and with some weak buyers, and then the price goes down again, and then the price rejects and goes up, and I will buy here. I will start buying here the S&P, if only if I have this setup. Because if today the market opens with more red candles and accelerates, let's say that we have a Black Monday, um, we will need to wait for the setup at lower prices, and that will be fine. Let's say that the S&P moves down another 100 pips, better discount, so that will be fine. But we will need to see the setup. We will need to see the buyers coming into the market. We will need to see the institutions coming into the market. Don't forget that concept is extremely important. If you are seeing big candles, if you are seeing big momentum, you shouldn't be buying unless you start seeing the big guys buying. That's really important when we are finding the end of the trend. All right, traders. So if you want to get the analysis every day, updated analysis, visit ElliottWaveStreet.com. Under the membership tab, you will find our plans. You will get immediate access to the system with your username and password to access the daily charts, the daily videos, the Telegram swing trades, and the Members Academy with educational lessons to learn how to use the wave counts and to learn how to trade the wave counts in the right way. Please have a fantastic start of your week. I'll see you inside the membership. Take care. Bye-bye.